This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. Joining me today, Surbhi as well as Rima. Good morning, ladies.
Good morning,
Hi, good
ladies
morning.
and gentlemen. So,
one day done, one day to go.
Yeah, that's right. And we're almost at the end of the fiscal. So, just a couple of trading sessions. I guess today, some of those year-end trades will play out. Maybe some propping as well as something that we could look forward to. So, let's see how things go. But let's kickstart with the action.
absolutely. Actually, there hasn't been much of it. If you're looking at, international cues, and everything is flat in a nutshell. You had more ranging action in US markets, and that pause continued. So third consecutive day, you have a minor red tick, no major sell-off on Wall Street, but there's been consolidation that's been going on, and it's across the indices, Dow, S&P, Nasdaq. We didn't get too much by way of action over there. Ditto for oil prices, ditto for bond yields. The US 10-year continues to hover around 4.2%. The thing is, there are not too many big cues this week, not just here in India, but internationally as well. Of course, we're all watching for more data points, but they come in only tomorrow and then on Friday, which is jobless claims, which is the consumer sentiment and the PCE numbers. All of that comes in towards the end of the week. So the market doesn't have too much to react to today. Let's talk about then some of the other internals that stand out for us. Now, the range-bound action on the Nifty has been continuing. Very broadly speaking, in the last fortnight or so, it's a 400, 450 point sort of a range on the Nifty that we have been locked in, with 22,200 being the upper end of that range. Now, the issue with the screen here is that large caps are lacking leadership. And that's what we saw even yesterday. IT is not firing, banks have been sulking, one good day, one bad day, and Reliance has suddenly gone into a bit of a slump as well. So we don't have any single sector or any key strong hands that are able to take the market higher. And therefore, ranged action is what we're getting. But the good news is that the internals even yesterday point out how the mid-cap market seems to be stirring back to life. However, must add that till yesterday at least, it's been larger mid-caps where we saw money flows come in, the likes of an Avenue Supermart, the likes of a Zomato. The recovery in the small cap screen, that still looks a little frail, and that was quite reflective in the way the advance decline ratio also ended yesterday. You had far more declining stocks than advancing stocks. So it's fairly ranged, not too many major cues to react to, more sort of stock-specific, company-specific news flow and action. But I must mention, guys, on the macros, I don't think this market has any problem whatsoever, whether it's GDP numbers. Yesterday, we had the CAD numbers come out, the current account deficit, and there's improvement there as well, because whether you're looking at it sequentially or year on year, the December quarter deficit numbers, current account deficit numbers look good, because now the deficit has narrowed to about 10.5 billion, which is way better than 16 billion last year, and even about 11.5 billion in the previous quarter. We're at 1.2% CAD, so that's not a worry. And bond markets as well as the forex markets would be cheering that news. But otherwise, I think a lack of big triggers and big cues. So let's see.
No, absolutely. Yesterday was also that little bit of a lackluster, slow trading, range for our markets. The Nifty ultimately ended down about 92 points at the 22,000, 22,000 mark. But it's still very much been in that broad range. Just to take note of last week's intraday high and the intraday low. It stands at 22,180. That was the high that we had last week. And on the way down, last week's intraday low was 21,710. And the markets have been hovering within this range of about 450 points for the last couple of days. The mid-cap index action was heartening yesterday. The mid-caps outperformed. The mid-cap index was up 1%, yet the advanced decline ratio was negative. So watch for the advanced decline ratio. And now the mid-cap index, by the way, has recovered 4.5% from last week's low. From last week's low, the Nifty is up 1.3%, but the mid-cap index is up close to about 4.5%. In terms of cues, very thin, as Surbhi pointed out. But today, Federal Reserve Governor Christopher Waller will be, talking about the economic outlook. So that's going to be watched very closely. And in our own markets, you're going to have lots of fundraise action. So big blocks in CDSL, Aster DM, we'll talk more about it. Angel One has launched a QIP. But, as you said, right, expect the year end, the index rebalancing, which typically takes place, to dominate the action today and tomorrow. And today we've got the Nifty Bank monthly expiry. And tomorrow you've got the March series expiry and the Nifty rejig.
Well, that's right, Rima. In the near term, I expect the Nifty, maybe we could consolidate a little bit and not move too much on the Nifty itself. As you said, the other big cue today is going to be the Nifty Bank, which will play out the weekly expiry as well. So expect some kind of volatility, hopefully on the upside, because that one has been struggling actually to come to terms or come to form. But what's really found its form in the last few days is the broader markets. And there are select pockets that are doing very, very well. We had a bit of a scare in the middle of March, but that's really done away with, because as of now, I don't see too many signs of fear, at least on the quality mid-cap stock. So, that party is pretty much back. And yesterday, that was replicated on the mid-cap index as well. The FI as well, towards the end of the series, they have unwound longs as well as short positions. Remember, we're getting into a long weekend as well. So some lightening of positions of what we saw. And yesterday, we put it together, 12,000 contracts. The gross positioning came down by around 12,000 contracts. You put that together. They continue to remain net short with close to around 67% of their positions on the short side. And in this series, quite a few times, we saw a huge amount of stocks that were in the F&O band. Now that number has come down just one. SAIL is the lone stock that's in the F&O band. And you have quite a few stocks that have come out of the F&O band as well. Well, let's move to the options data then. In the near term, that 21,700 to around 21,900 is very crucial. And the bulls believe that the 21,900 mark will not break. Even yesterday, we saw some action at around the 22,000 put. It has the highest open interest. The premium is around 60 rupees. And that perfectly ties in with yesterday's low as well as the 50 DMA. Both of them came in at around 21,948. So that's a crucial support zone. The broad range you're looking at in terms of a support zone is the recent low, which was at around 21,710 and the 21,900 odd mark. But the Nifty bank, that's struggling to get past the 20 DMA. Though it's got support at around, at the lower end, which is the 100 DMA. So the crucial level that you'll want it to cross is that 46,900, 47,000 odd mark. While on the lower side, you're looking at these as support zones. Since, cash market stocks have come back into flavor as well, I'm looking at Snowman Logistics. Yesterday, there was some interesting action that we saw out there. The stock ended very, very close to around the 20 and the 50 DMA. In fact, it almost breached that level on an intraday mark. So it's at a very, very crucial juncture. And in the recent low, the panic low, it made a low. And from there, it's seen a good amount of bounce. And the buying that we saw yesterday was backed with some delivery-based buying as well. So that's going to be important. And as I'd spoken to the promoter entity, that's Gateway District Parks, just last month. And they indicated, yes, our intent is to make the company, that's Snowman Logistics, make it a subsidiary in comparison to an associate company, which means that they'll want to take the holding from around 40 to around 50% in the coming fiscal. That's FY25. For the time being, they're around 44.27%. And they have done some buying in this quarter itself. So towards the end of the quarter, they want to fulfill that entire 5%. Maybe the promoter entity, you should keep an eye out on the action out there. So that's a stock that I'm looking at. Let's see how it goes. But as I said, Nifty could consolidate. The Nifty bank holds the key. And select stocks in the broader markets will continue to outperform.
Okay, thank you very much for that. Let's get to the money market views then. Kunal Sudhani of Shinhan Bank says mixed US data shows high durable goods order and low consumer confidence sway sentiment. He says ECB rate cut hints speculation amid a divided Fed view on easing. He says the dollar index is again trying to test 104.85 level. For the USD INR, Kunal expects a range of 83.2, acting as a bit of a support, while 83.5 against the dollar will act as a resistance.
All right, let's move to a view on the bond markets. Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 7.05 7.1% last week. He says the FOMC kept its projections unchanged with 3 rate cuts this year, resulting in lower US Treasury yields. He says large-size SDL auction and FBI selling in bonds caused domestic yields to inch up to 7.1%. He adds that given the fiscal year end, he's expecting the 10-year benchmark bond yield to stay supported and trade in the range of 7.05 to 7.12%.
Well, it's going to be a stock-specific market, and we've got plenty of stocks that we're tracking for you. For the time being, let's run you through our special top 10 segment. We're looking at Cipla, Sanofi, Chalet Hotels, Pratap Snacks, Technocraft Industries, and Power Grid. All of them will be reacting to positive news flow. While we have a couple of large trades as well as some fundraising to look forward to as well. So the stocks we're tracking that could react to negative news flow: Acidiem, CDSL, Angel One, and Uflex. That makes up our top 10 segment.
Okay, all right. So we'll get you more details on all of these stocks in just a bit. But